Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. It is Tuesday morning. That means the lumberjack is here. How you doing, buddy?
I'm doing awesome. Feeling a little saucy. So
Oh, this ought to be. This first topic's pretty spicy, so this should get your attention.
I've got a pre-written apology note ready. Go.
Yeah, I just have cut and paste, man. Cut and paste, or copy and paste. Copy and paste.
Yes.
Yeah. So I don't know if you caught the daily financial news. I think you catch it usually later in the day.
Usually do. Yep.
But I talked about the real estate market crashing 25%. Now, if you watch my channel, you know that I do not believe it's prices, but it's transactions.
Sure.
What I thought was very interesting is this morning, I shared an article from a chief economist of some research firm that's basically saying real estate transactions are going to go from a rate of 6.1 million, which is a normal market. It was 2018, 2019, 2020, 2021, right around 6 million, plus or minus 100K.
Yep.
He is now saying, his name's Ian something, is saying that they're going to go down to a rate of 4.5 million, or a collapse of 25% by August. So that caught my attention. So I'll just stop there. There's more to talk about, but yeah, do real estate transactions fall 25% by August? Dude, that's 5 months away. What do you think?
I mean, I'm just a ninth grade dropout, but I disagree.
Okay. All right. Well, let's talk about it.
I think that transactions will definitely be down.
Mm-hmm.
I think it's impossible to say even a range until we know how many hikes are happening between now and then.
I think that's fair. Yeah, I think that 4.5 million is assuming an aggressive Fed. Yes.
Yeah. So let's say, there's a lot. So 50-50 on 50 points, right? 50-50 on 50 basis points.
Yep.
I think that if that's what happens next, then I think he's probably wrong.
Okay.
I think if that and another 0.25 or another 0.5, then he's right. I think we could absolutely be in the fours. And yeah, I think we could absolutely be in the 4 million, on pace for 4 million 4 million annual trends, or 4.5 million annual transactions.
Yeah.
If we see that, 0.5 and a 0.5 or 0.5 and a 0.25, I think we could.
Yeah, you're going to love today's daily financial news, because the other thing I said today is Jerome Powell, in my opinion, with 30 years experience reading the Fed, I believe Jerome Powell said yesterday that the next two meetings, which I'm doing this from memory, May 3rd and June 16th.
I think it's around, that's about right. Yep.
Are both going to be a half point.
I don't disagree.
So
I don't disagree. Yeah.
That means in the next 8 weeks, 7 weeks, all interest rates, every interest rate across the board is up no less than 1 full percentage point. Then I do the math, because it's always math to me and you, right? So 6 million, 6.1, we'll do 6 million because it's easier math, is roughly speaking 500,000 closed transactions. That's what, 500,000 times 12 months equals 6 million units. That's how we get there.
Yep.
4.5 million means we're going to only close 375,000 by August. So again, when I play this out, because again, I believe as of right now this morning, we're getting a 50 and a 50. So
so awesome.
Yeah, it is. So by middle of May, we're going to be up a full percentage point. And then I play out, okay, we get up a full percentage point. The market resets. That's May. First off, the market wigs out, the stock markets tank. And then just the offers, right? Because a lot less people are going to qualify. You'll still have cash buyers and blah, blah, blah. I actually think a lot of those cash buyers truly aren't cash buyers. I think they're people with, non-QM or hard money loans that are acting like cash. But anyways, so I think some of that dries up. But yeah, I think, if we get a full point by the middle of May, dude, we could be down. We could be at 350 or 3.25 by August, which would bring us down to a 4 million rate this summer. I think it's not only possible, I think it might be probable that we're down to 4.5 million units. What do you think?
Yes. Yeah. I'm hoping for the 2.5s. And here's why. how do I say this the nicest way I can say this? I
why
think
why would you do that?
why start now?
Why start now?
Oh, trust me, this has been that's been the nice version of me. So I think that one of the things that I constantly get trolled about is, haha, your portfolio is going to go down. Haha, I don't care.
Yeah.
I want to buy a bunch more. It's bad for everybody else. It's awesome for investors that have a ton of dry powder sitting there waiting to get into the game, because this is going to make everyone question the ground beneath them. Yeah. Mike, we have been dealing with petulant infants. I know I have 3 of those sometimes, but we've been dealing with petulant infants when it comes to buying at 2.5, buying at 3, making it an investment property, this, that, and the other, blah, 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 and them not actually doing the math. And all of these people, thinking that, not people, listen, people in the one rental at a time course, people that are part of this community, they're doing the work daily. They understand what this takes. Yeah. You understand that it's hard work. You understand that it's 5 years of suck. You understand that it's a lot of pain and a lot of work. Mm-hmm. The people that are out there that think that this is easy money because they got into a market that's appreciated 100% in the last 3 years. Yeah. It's going to be painful for you. The good news is Mike and I are here to rescue you from your underwater loan. Yeah. I mean, that's going to be if you have to sell, right? And then sub 2. And this is why I believe that in the next 2 years, year to 2 years, sub 2 is going to be the most important thing that people understand, because people are going to be underwater in properties. They're going to need to sell. Now, again, this is not about income properties, because whether my income property with 30-year fixed rate debt, making 27%, my rents in a housing correction don't go down. Yeah. They go up.
Yeah. Even if they're flat, it just doesn't matter. That's
don't
what people
care.
Yeah. So again, right, let's take some real world numbers, right? So my portfolio in the Great Recession, say it collapsed 50%.
Yep.
A lot of these trolls, as you call them, would be cheering.
Agreed. They're rooting for our demise because they think we're greedy.
Yeah. But guys, we've been around the block. All of our debt is fixed. Residential loans can't be called. No bank asked for anything. My rents went up. Again, these are real numbers, not hopes. My rents went up 10, 20% over a couple of years. Mm-hmm. So yeah, my portfolio collapsed. My net worth. That's why that 2-year period is why I never talk about net worth, because I've seen it disappear.
Yeah. Don't care.
Don't care.
And
not a number.
You and I have never gone into a store and said, I don't think you understand. This is my net worth. I would like to buy that.
Yeah. Can I just take it home?
Yeah. They still say, sorry, sir, you're going to still have to pay. Otherwise, that's burglary or theft.
Yeah. Otherwise, it's petty theft or grand larceny, depending on the price.
So at the end of the day, that's why, again, for me, I don't care. We're not talking our book saying, yeah, to the moon with prices. I don't want to the moon with prices. No. I hate this market. I hate having to evaluate a property in an hour because another deal was already written, because another guy had a stack of cash that was way too big and he spent way too much money, and the numbers aren't going to work long-term for him on that property. Yeah. Right. So if you're going to spend your time teaching Mike and me the economy, how bad the crash in 08 was, recognize that with the number of millions of dollars that we have on the line, we've already done the homework.
Yeah.
And we feel pretty good about it. We're ready for
tens of millions of dollars. Tens of millions.
Yeah. It's tens of millions. And that's the other thing too, is, I mean, it's, I always tell people, listen, never come to me for diet advice.
Yeah. No.
Wrong guy. Wrong guy. Don't come. I can give you the path to follow if you do the exact opposite of what I do. That's probably your best path.
Yeah, that's right. Don't do these things.
So I don't take advice often about property management or realty and investment from a person that owns none.
Yeah. Yeah. Kind of the last thing on this. So first and foremost, I think you laid it out in your opening. If the Fed does what I think they are, which is 50 basis point moves in the next 2 meetings, I believe real estate transactions could absolutely fall 25%. Absolutely. What we are then going to be left with as investors is we're going to find the mysterious motivated sellers. They're going to be easy to find.
Yeah. Yeah.
Because
Do you
again, yeah, go ahead.
So you remember, right? In what was it? I think it was like right in the end of 08, right in the beginning of 09.
Mhm.
You could drive down a lot of streets and half of them were for sale.
Oh,
Or
so
three-quarter, like,
yeah, 3/4. I was in one of the worst markets, peak to trough, over 75%. So you people wishing for pain, I've been there. I did just fine. It's okay.
exactly.
Be all right.
We'll be perfectly fine. And the other thing too is, I mean, it's just what really bothers me is that watch a video, don't even watch the whole thing. Watch the first 3 minutes, troll me.
Yeah, dude,
And then-
most of them are watching the title. Like I put out a video just a minute ago talking about housing crash of 25%. First comment, oh, I can't wait. Price is going to go down. Blah, blah. I'm like, you didn't watch the video because I said prices are going up 5%, but thank you for your comment.
It's usually a pretty clear indicator when I post a 17-minute video and it's been live for 3 minutes and I have 2 comments. I know you can't listen to it at 10x speed.
Yeah, it's pretty crazy.
So
yeah, so I'm excited. I actually think it's going to happen. I mean, you know, I don't know. I wouldn't put big money on it today, but I'd put $100 on the fact that I think we get 2 rate increases that freezes buyers, that freezes the market. And then we get, so that's in May, then June, July, the market, I've been there. I had seen a market lock up, lock up multiple times.
Yep.
And it takes, again, everybody's going to want it to be a nanosecond.
Right.
A market locks up. It could be 30 or 45 days before agents, sellers figure out where they want to play. Some sellers, and I would argue most sellers in the market that's coming, will simply pull their house off. You don't understand. My house is special. My neighbor got this. I should get that. My rate is here. I got no place to go. Blah, 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 blah. So inventory comes off. That means the stuff that's left, kind of motivated. So I'm excited.
At least a little bit.
Little bit.
But that's the thing is, so again, if you actually are a troll and you took the time to watch this entire video, A, I doubt it.
Yeah.
B, I am more than happy to be taking the bets and being the house on all of these people that believe that real estate investors are all going to be in trouble. It's what it does is, are there going to be real estate investors that get in trouble? Absolutely. And you know what? The first ones are going to be ones that own commercial real estate.
Yeah, we'll talk about that later.
Yeah. The second ones are ones that didn't have a process and a plan and stayed disciplined in what they were acquiring and then how they were pricing it and the structure around their business.
Yeah.
Bad businesses in any recession largely fail. And that's why they fail. It's because they were bad businesses to begin with.
Yeah, here's the deal. I've been doing this a long time. We're going to have plenty of real estate investors who look like geniuses. Some of them are selling courses that did okay the last 5 years. They will be bankrupt inside of 2 years because their debt structure is wrong. They have adjustable rate mortgages, or they have short-term hard money or bridge debt, or they're banking on Airbnbs and C-class neighborhood. It's just all kinds of stuff that works. When you're in a real estate market and it goes up 20%, you could be a moron and make a lot of money. Yeah. In a flat market, those folks go bust. I've seen it before. It'll happen again. And I'm so excited. I'm so excited. I'm so excited, not only for myself and for you, but for all of the people that in the one rental at a time community that are doing the work. The last year, it was hard, right? Last year, the MLS
markets, right? They've not seen the markets like we've seen in the past. And
I'm very clear. This was the hardest market by last year to buy out of the MLS. It wasn't impossible, but it was hard.
Nope.
The market that's coming up could be very easily the second best market I've ever seen, because the motivated sellers are going to be they're going to be laying there they're like fish that are just jumping in your boat. Like, do you want that one or do you want that one? You should know your numbers. Don't do bad deals. No alligators, get good debt, all that stuff. But man, do the work now, learn your market, heartbeat, buy, box, track. It is going to be awesome. Matt, how can people follow you?
Lumberjack Landlord on YouTube and Lumberjack Landlord on Instagram. And then we have our 3-hour live stream on Sundays at 11:30 a.m. Eastern time. And then the newest article in Business Insider,
I
which is
saw that. That's very cool.
that's honestly, like they do such a great job. Like I'm kind of addicted to it now. Like I probably read 95% or 90% of the real estate stories that they do.
Yeah.
It's so many different angles. Like
Yeah.
I love it. So that's just me.
Very cool. Thanks, buddy.
Thanks, Mike.